Hey guys, this is Phil Nelson, and you are listening to my brand new podcast, Capital Creation Project, a show that talks about the up and down journey to find financial freedom through entrepreneurship. I decided a long time ago that I was going to choose the life of risk in hopes of gaining the reward, and it has been a journey of both good and bad. I'm nowhere near the end goal, but I've learned that this is all a part of the ride. Hey guys, welcome back to the Capital Creation Project. I'm your host, Phil Nelson, and I'm excited about today's show. I've been excited about all the shows, but I'm also really excited about today. Today brings on a new guest, a guest that is special to me. I know I've said that before, but it is special to me. This is a guy who's been a part of my life for a while now. 5 years, 6 years? What have we known each other now, Jordan?
I think it's been a little longer.
Maybe even longer than that.
Yeah, 2017.
Yeah, this guy shepherds all of my money and makes sure that whenever I even go to the store and I need to pick up groceries, that I have to run it past him. Yeah. This is Jordan Bingham, who is my financial planner. I'm super excited to have him on. Thanks for coming on the show today.
Thank you for having me. Good to be here.
Absolutely.
It's always good to see you.
We started working together, like I said, probably a few years ago, 7 years ago now. And what I've really grown to appreciate about Jordan is kind of just a holistic approach to investing that he brings. He's constantly looking at it from different angles. He's making sure that we're well diversified, not only in stocks and equities and commodities, but also in real estate and businesses. It kind of goes back into the other episode that we've had, or the episode I should say that we have coming up here with Dan Duran. But just a holistic approach, I think, is super important. So oftentimes you can get too narrow focused as financial planners, and I didn't love that. So for me, the opportunity to work with somebody who kind of just takes a well-rounded approach was super important. So again, thanks for coming on the show, and let's kind of hop right into it here.
Sounds good. Let's dive in.
So tell me, why should someone have a wealth strategist? What do you want to be referred to? Are you a wealth strategist? Are you a financial planner?
Technically, we are licensed financial advisors. My title within my firm is a wealth advisor. Okay. Just because what I'd say is we set our business up a little differently than the traditional financial advisor. There's investment managers out there. There's insurance salespeople out there. Yep. As you mentioned, from a holistic wealth standpoint, we're, independent fiduciary firm. And so we really can take a step back, educate the client, get to know them, get their goals, objectives, and really work through that educational process to figure out what makes the most sense for them. Because in my opinion, it's all about managing risk. I don't feel like there's a right or wrong way to do something. I think someone can do things a variety of different ways depending on what they're trying to accomplish.
Yeah. Yeah. The market, and I've talked a lot of through this podcast now in the previous episodes about from a real estate perspective. So we've kind of hammered that down. What are you seeing kind of just 10,000 foot level of our relatively turbulent economy? Hyperinflation, the Dow and is down, the Nasdaq's down. Like, what are you seeing? What are we okay? Are we in a tailspin? Is life as we know it over? Sorry, I'll let you talk.
No, you're good. I think it's a great question. It's a question that we are receiving constantly. And surprisingly, not a lot from our own clients. And part of the reason is we take this educational approach. And, people always have questions about what's going on. And what's funny about this time in the economy is, we track a lot of chief economists from, big institutions. And what are people saying on the street? And what's an opinion, I think, that most people need to form around what's going on in the economy. What's funny about what's going on right now is that a lot of these chief economists are flip-flopping on what they think is going to happen. And it went from the doom and gloom in the beginning stages of this year, end of last year time frame to now it's, people think there's going to be more of a soft landing and maybe not so bad.
Yeah.
And I never want to predict what's going to happen, just because there are so many things out of our control. Mm-hmm. And so all I can say is that when we're planning around a specific client, we want to customize and tailor to their situation to make sure that they're as well insulated as they possibly can. Because at the end of the day, it's about managing risk and expectations. Yeah, no doubt. You kind of alluded to it a little bit. At one point, the narrative was, we are unquestionably going to find ourselves in a recession. And there's still those out there that believe that. And I'm not suggesting that I don't think that we'll have some pullback or whatnot, but are you seeing, or from what you read and, the indicators that you see, are you seeing that we're going to unquestionably find ourselves in a recession? Or if we ever get to the point where we are classified as, where we're being in a recession, I think it'll be different than what we've seen in the past. Yep. As I mentioned, maybe a softer landing. Mm-hmm. Again, I'm not going to predict on what's going to happen or when. I'm personally a little hopeful we do go into a little bit of a recession. It's a buying opportunity. I mean, real estate prices have been high for a long time. Yep. Equity valuations are high. I mean, you've seen the market run up over the last couple of months. And so I think some sort of recession or economic downturn is just a natural part of the economic progression and the economic cycle. And so at some point, we're going to probably see some level of a pullback, but we just don't know how severe it will be. I mean, it was so artificially inflated, right? It's been since 2020, it's been artificially inflated for sure. So to that end, there has to be a pullback, right? Like there has to be some sort of pain that we will go through. And to what degree that is, I don't know. But, and I think you brought up a great point. It's all really how you view it. It's an opportunity for us to take advantage. And if there is a pullback, have some cash available, whether that's real estate or that's buying, businesses or that's, buying stocks as they're low, whatever the case may be, have some available, because that's where real opportunity and gain is made. Well, and I'll go back to saying it's about managing risk and expectation, right? Yep. So if someone is cash poor, so to speak, in the short term, because they feel like they're behind or they feel like they are missing out on something. And this is where my entire job, and you can get into all the specifics of every aspect, but it's really helping people eliminate making random emotional financial decisions that can set them back. And so people, they buy on emotion, they sell on emotion. Everything is made by an emotional decision. They watch the news, it's emotion. Yep. Right. And so you have to really take the step back, take the high level view of your situation in particular to understand what is maybe the best decision to make going forward, because every decision you make, there's a ripple effect. Yep. Okay. So we kind of talked high level about the economy and where do we see it going. What, in your estimation, now I'm asking for your opinion here. Don't give me I'm just here to mitigate risk. I want your opinion. What would you suggest is the best way to structure a portfolio? Is it mostly stocks? Is it mostly real estate? Is it a combination of all of that? I mean, how would you, if you were building it yourself, how would you structure And you ask a very difficult question, because I'll say again, everybody is different. But if you're asking for me, I know you want some specifics on an answer. Yeah. You have to look at the goal of $1. What are you trying to accomplish? Yeah. Me personally, I'm very cash flow driven, so I look for cash flow producing assets. And I go back to risk. You can get cash flow through investing in businesses. You can get it through investing in real estate. You can get it through investing in dividend stocks or bonds or treasuries or whatever, private equities. Some private equities will generate cash flow. It all depends on the amount of risk you're willing to take. And sometimes risk is in lack of liquidity. Are you willing to give up some cash in order to generate those income streams? Yeah. So I'm always looking for income generators, whether it's, to me, anything in the market is longer term growth focused. And I'm talking me specifically. I'm not talking for every client's different, right? And not every client wants to be in real estate. Not everyone wants to be in the market. So as a, taking the fiduciary approach as we just have to understand that there's not a right way to structure it. But as a general rule of thumb, I like to say, think about the dollar in terms of a purpose, a job to do, and give it a time frame to do that job. And so that can help mitigate risk and volatility over time, regardless of what you're investing in.
Yeah. Okay. Talk to me a little bit about estate planning. You're nowhere near needing to plan for your estate, but when you have clients who come to you, tell me about share with me let's go that route. Share with me a story in which somebody neglected their estate and they found themselves in a rough spot with probably some significant resources that most people would assume that's a lot of money.
Yeah. So one, I would say estate planning in general, whether you think you need it or not, if you own anything is probably somewhat important.
Yeah.
Regardless of if you have kids or if you're married, I mean, like us, we're young, I would say young in relation to the wealth building process overall, but having kids, we own real estate, we have assets, we have things. It's important to have some level of basic estate planning because the whole purpose of estate planning is to essentially get you through probate as quickly as possible, make sure your assets and everything that you have goes to the people you intend, right? And if you can avoid probate by doing so, then great. If you can avoid paying estate tax, if you're wealthy enough to have estate tax liability, then even better. So quick story. It's something we see quite often with wealthy people who own a lot of real estate. And so they work their entire lives building their portfolios and they don't create any sort of estate plan. They might have a basic will, but there's no plan around the tax component. And I would say that's a part of the biggest risk that we'll see when analyzing a situation like that, where you have someone worth, let's say, $50 or $100 million in property, and it's all in property. They might have a little bit of cash, and they have no estate planning. They have kids, they have grandkids. They want to make sure their kids are left with some sort of legacy. If there's no estate planning done and all of the assets are passed to the kids inside of their estate, essentially, quote unquote, then all of those dollars are now subject to the estate tax calculation. And so here in Washington, we have an inheritance tax, and then there's a federal estate tax, right? And there's different limits on those dollar amounts and asset sizes, but there's also different tax rates in each of those categories. So what we'll see a lot is where maybe a family, someone passes away, their assets passed on to the kids, and property has to be sold to pay the tax, where they maybe didn't plan to pay for estate tax. So, I mean, that's one big one that we'll see quite often is just the planning around that. And most people don't want to do the planning, super in depth, or they might not want to give money away because they think they'll lose control. Right. Essentially, of the asset. And that's not necessarily always the case.
So just real world example. Let's just say for you, that example you gave, you got somebody who's worth $50 million in real estate or otherwise. They're worth $50 million and they pass away and they did not take the appropriate path in terms of estate planning, and their liability is pretty well exposed. How much would somebody like that be looking to pay in tax? And I know that we're not necessarily, it's not a super real world example, but there are people out there that are worth that much money. And
sure. So it'll depend off how good their tax planning is with their CPA. So when we do estate planning, it's a very coordinated conversation with CPAs and attorneys, because if you don't factor everything into it, you're going to miss something. Yeah. So if someone doesn't have any planning, there's no discounting on property values, there's not, depreciation, there was no estate or trust planning or anything like that. The federal is married couple, husband married. And wife. Yep. The federal limits right now, the gift limits, I think, are right around 11.2, 11.3.
Yeah, that's what I thought.
Is it more? Let's just call it rough numbers, $22 million for a married couple on a federal level. So that leaves roughly $28 million of liable exposure on the federal level. Let's call it 40-50%. tax.
Yikes.
To the federal government.
Yikes.
Then anything above 4.4 million in the state of Washington as a married couple.
Yeah.
All these are tiered rates, right? There's so many factors at play, but let's call it an average of, 12 to 15%.
Yeah.
15's on the high end,
Yep.
10 on the low end, but it starts at 10.
Yeah.
And it tiers upwards. And so you're looking, I don't know, tax, probably 20 to 25 million, roughly half all in when you look at it with no planning.
That's a lot of money to just pay to the government.
And I've had we've had clients come in and they're in this situation. Part of the reason they come see us is because they want to solve those issues. Because the first question I'll have is, tell me how your kids are going to pay for that.
Yeah.
I said, do you have that much cash?
Yeah.
No. So they're likely going to have to sell property. And if the goal is to pass property along, then it's not like there's not a financial product that solves that issue, right?
Right.
There are some that can help, like life insurance is one for sure. We've talked about those in the past, but a lot of times they're used for the wrong reasons.
Sure.
As you know.
Sure. Okay, really quickly.
Yep.
This is largely, what I do is real estate. Most of the people on here will know me and know that I talk a lot about real estate. So what would you say, one quick strategy that you can think of off the top of your head that if someone's looking to buy real estate, how could they most efficiently put themselves in a position to buy an investment property? Like
savings wise, you mean?
Is it purely just save your pennies, or is it like, okay, I should start by, doing X?
So it really just depends. You need capital to buy real estate, but there are, as you know, ways to get into it without actually owning the property through syndications or limited partnerships, right? So you can go into those things with smaller dollar amounts or buy REITs as well. Those are things that are on the open market that you can own in a fund version.
Yep.
But in terms of one singular strategy, give me some context. The average person that saves $500 a month is going to take a long time.
Well, so like you and I used to talk about how like people would sell life insurance. They would sell you life insurance as like your own kind of version of a bank.
And you see this all the time on social media.
Right. So do you still recommend that as a strategy? I'm looking to buy real estate. Jordan, don't laugh. This is a professional thing. They're looking to buy real estate and they have been sold this idea that if I buy this whole life insurance policy, that I'll be able to save money quicker and use this as a bank for me long term, my own personal bank.
What I'll say is insurance, like any other financial product, is a tool on your tool belt that you can utilize in many different ways. And
you should get into politics. Constantly towing the party line.
One of the things you can do with insurance is load them up, right, with cash over time. But I feel like there's a lot of factors at play, depending on the performance of the policy, the type of the policy. You mentioned whole life. There's other types, right, as you know. Are they the best wealth building vehicles? If someone's looking at saving $500 a month and that's all they have, and they're told to, put their money into something like this because it'll, give them a great rate of return over time and they can borrow against it. In my opinion, it might not be the best rate of return, but it does offer other benefits.
Sure.
Right. And so over a long period of time, it is a vehicle you can use to borrow from against, that you can use for whatever you want. You can finance new cars. You can finance a property. You can essentially be your own bank. They call it infinity banking, right? I won't say I'm all in on loading those things up to borrow from against, just because there's a lot of unknown factors, like the performance of those policies over time. So when you're being, let's say when you're being shown something by an insurance person who are not, I'm not saying they're bad people by any means, but if you're looking at this policy that's projected to be X and then it does something else, or it doesn't, return what you want it to. There's a lot of ifs, ands, or, like what ifs that go on that can happen along the way. I think there's many ways to fund a property, whether you do it from investing in the market and then taking money out, whether you take lines of credit, whether you on your assets, or you take, borrow from your insurance, or you do limited partnerships. I think there's what people look for is fast ways to make a lot of money, to take money, to then invest in property. And it unfortunately is a longer process than that. unless you got lucky in crypto or something.
Which is a whole nother episode. We'll have you back for that. Yeah, no, I agree. It can't be done. It's not a get rich quick scheme. You're going to have to build it over time. But I will say that your kind of overview of the market here, your thought process on kind of where we're at, super helpful for the audience getting to know you a little bit and getting the chance to kind of pick your brain a little bit as we walk here through this process. So thanks for coming on. If you guys want to talk to Jordan, you want to connect more with him, we will put his contact information, his personal phone, his email address. We'll put it somewhere. We'll make sure we'll blast it all over.
My cell phone number, everything.
He wanted to talk to people anyways. So anyways, if you guys want to get in contact with Jordan because you feel like he could add some value to you, happy to get you in contact with him. I highly recommend him. Like I said, he's been working for my family for 6-7 years now, and grateful for his advice and his tutelage. So thanks for taking the time to connect with the audience here. And we're grateful for it.
Thanks again for having me. Appreciate it.
Absolutely. Thanks guys for listening to this podcast, this episode. Enjoy your guys' day and look for the next episode coming up next week, I think. Anyways, thanks guys. Fight on.